And off we go.
Great. Well, welcome everybody to tonight's session, Put Your Money to Work Locally, Investment Clubs 101. This is the fourth part of our local investment series, exploring how we can use our economic power to enhance and sustain our communities. My name's Erica Hoffman-Keese. I'm the Executive Director of the Green Mountain Economic Development Corporation. We're the Regional Development Corporation for Orange and Northern Windsor counties in Vermont, and we link government, education, and private sector resources to help companies and businesses grow, improve, and thrive. I'll be facilitating the conversation tonight, but I'm joined by Nancy Leroux from Vital Communities, who is our partner in this endeavor. And Vital Communities is a White River Junction-based nonprofit organization that cultivates the civic, environmental, and economic vitality of the Upper Valley. So we have a lot that we work on together. So Nancy and I are here with you tonight, but we could not do this alone. Tonight's session, the previous three activities, the next three, they wouldn't be possible without all of our other partners. So to all of these people on the screen, thank you. Before we get started, some quick ground rules. Please stay on mute when you're not speaking. Share in the chat who you are and what brought you here tonight. And you can also use the chat if you have any questions as we proceed through the evening. And if you have any problems tech-wise or otherwise, please reach out to Nancy for assistance. She'll be running the chat side of things tonight. And this event is also being recorded. The recording will be uploaded to YouTube and the link will be sent to everybody who registered for the event. And finally, please remember that this is an educational and informational event. What you hear tonight should not be construed as specific legal, accounting, or investment recommendations. It's really just to share knowledge and learn from each other. So before proceeding, I would like to take a moment to acknowledge that many of us are on unceded territory of the Abenaki. Thank you. So the purpose of tonight's conversation is to increase interest in local investment by sharing the process for starting or joining an investment club, or just looking at the activity of investment together with other people, making it more of a social and group thing. I'm going to start with a very brief intro to the what and why of local investing, and this content was compliments of today's presenter, Matt Cropp. And then we're going to jump right into a presentation by Matt. He's coming to us tonight from the Vermont Solidarity Investment Club. And following Matt's presentation, I will introduce a few other representatives of area investment groups that are also on the call, and we'll open up the floor for questions and conversation, which we already seem to have started before we even started tonight's event. So I think it will be interesting. And at the very end, we'll wrap up the evening with a quick look at some of the upcoming local investment activities that are also a part of this series. So what is local investment? It can be a lot of things: local banking, buying local, volunteering your time, donating in your community. But there's another underutilized resource that we can put to work, and that's our own investment dollars. And that was the focus of this series of activities. According to Michael Schuman, who's the economist who ran our workshop last month, Put Your Money Where Your Life Is, American households have 56 trillion invested in stocks, bonds, mutual funds, pension funds, and insurance funds. And nearly all of that is in global companies that they barely know or trust. And anecdotally, to give a little context here, I've heard that the Upper Valley region alone has $5 or $6 billion under management in the global markets. So harnessing the capacity of even a small part of that capital locally would be very significant. But why is it important to put your money into a local market? And this is where we get to Matt's contributions. That capital can have outsized impact. Small businesses have a really hard time accessing the smaller amounts of capital that are needed, so they're oftentimes undercapitalized. So a little local capital can go a really long way for a local business. Secondly, you have better information. You live in the same environment. So that shared knowledge of local conditions and who each other are, the individuals involved, can really help inform your risk assessment and decision making in unique ways that aren't available to you if you're investing in something kind of outside of the local community. There are specialists who can help with that, but this is looking at what you just individually bring to the table. Investing locally also allows for increased influence. Investing your money is one thing, but you probably have some professional expertise that you can share or even sweat equity. And those things can further influence the trajectory of a favorite local business. So beyond just your financial return, you can probably realize some significant social or community development returns more directly, sort of that triple bottom line you may have heard of. And finally, your local investment stays local, something we look at called the multiplier effect. In late 2020, Vital Communities commissioned an independent business economic impact survey in the Upper Valley. And they found that for every dollar spent locally, approximately 60 cents recirculates in the community. National chains recirculate between 14 and 30 cents. And for those Amazon purchases, almost all of that money leaves our region. And that in 2019 was about $165 million in the 4 counties that make up the Vital Community Service Area. So if you think back to 2020, you can guess that that number went up significantly. So most of us mistakenly believe that we really don't have much choice but to continue investing our money in these conventional stocks and bonds, which has a place. But there are real alternatives locally, and we just need to learn more about them. Which brings us here tonight to learn more about one of those alternatives, which is investment clubs. So take it away, Matt.
Hey, Matt, you're muted.
You're muted.
All right, there we go.
Yeah.
All right, well, glad to be here with you all. I'm coming to you from the other side of the mountains in Burlington, but I'm excited to both share a little bit about kind of investment clubs, what we've been doing with our club, and to also just hopefully have a good conversation tonight. So I'm both the chair of the Vermont Solidarity Investing Club, and then with my day job, I'm the executive director of the Vermont Employee Ownership Center, which provides kind of advice and education around employee-owned, broad-based employee ownership, such as ESOP companies, worker co-ops, that sort of thing. And to kind of continue the disclaimer, right, I'm going to mention probably a few investments that we've done as kind of an example, but this doesn't constitute advice that you should or shouldn't invest in any particular thing. Just kind of, so do your own research on that front, but we'll be using those as examples. So starting off, just a little overview of kind of the contours of sort of what investment clubs are. So the basic idea is, and it's been around for a long time, that you can get together a group of people and pool your money and invest it. There's a lot of regulatory restrictions around how investment can happen, and so this is kind of one of those carve outs that's existed for a while that allows for everyday people to be able to make maybe meet minimums and kind of have some kind of collective impact with their investment money. So traditionally, the kind of, when I was reading a book about this when we were first starting ours, I pointed to 1898 in Texas as the first example of kind of a modern investment club on this model. And they've often been, and you might have heard kind of years ago, less so recently, but that there's a kind of there's a number of waves of big booms of these as kind of shared sort of more public equity stock trading type clubs, where it would be a way for people to pool their assets and bring down the cost of brokerage fees and stuff like that. Now, in the age of Robinhood app and stuff like that, the and online trading, that purpose has been less. And so my experience with investment clubs really has been in the context of this kind of local and alternative investing. So there's a couple of kind of rules to consider around this. One is really the idea of that they need to be participatory. Once you hit the point of having some people making decisions for other people about the money. It sort of shades in the eyes of regulators into being more of a kind of an investment company type arrangement, which brings down all sorts of a variety of regulations. So the investment clubs are structured either as a partnership or as a LLC type partnership that and generally there's the expectation that everyone is participating in the at some level in the decision making process. There's also some size limitations. So yeah, the limit of 100 people. Most investment clubs that I'm aware of are well under that. But ours has even had conversations about, well, if we got big enough, maybe we would split amoeba-like into, there are different parts of the state and be in alliance with each other or something like that. And then, so you're allowed to make investments even if you're not an accredited investor, which is this sort of status that you receive if you have a certain amount of wealth or income that allows you to invest in a lot more things. That means that if the investment club is small, you're not necessarily able to sort of invest in the same types of offerings as an accredited investor. But we'll get into a little bit more about kind of some of the advantages to deal flow for local investments that can come through the investment club model rather than trying to go it solo, for instance. So in terms of creating an investment club, this is kind of a very high level, just kind of set of the steps it takes to get there. So there's kind of a rule around no one owning more than 25% of the company. So so that means you need at least 3 other collaborators to create this thing, and I think a few more might be good. Although I think a group, kind of a working group of maybe 2 to 4 people in terms of actually getting an operating agreement together and all of that can be useful. What we did was we had an initial meeting, a number of people expressed interest in being founders. We selected a little subcommittee that sort of did some of the legwork and then came back to the group and ratified our documents and launched. So once you've got your collaborators, you want to develop agreements and policies. So this looks like the operating agreement for the LLC that defines, how decisions are made, what rules there are, how, there's a whole variety of things you want to have included in there. And we were able to actually get our operating agreement from another investment club and then modified it in some ways, put it in front of an attorney who was a member, and then, we're kind of finalized it after that. Well, you also want to have a membership agreement that clearly lays out what the rights and responsibilities of membership are. And so that as people come in, it's clear that they're expected to participate at some level, and that the expectation isn't that their money is going to be liquid and withdrawable at any time, because it definitely is not in these sorts of investments where we're putting things into. Talking through investment policies, what are, as a group, is it something, what are you prioritizing? Is it local? Is it environmental impact, social impact, return? How do you want to balance those things? The tool that we use was kind of a modified version of something that we received from the White River Investment Club. That's kind of a rating matrix that you rate the investment on a 1 to 5 scale for on a number of different axes, and then use that as part of the conversation. Decisions around privacy. How much information other than, say, your officers do you share about all of the members with all of the members? And other things you feel like that it's good to have laid out at the beginning so that it doesn't cause conflict or disagreement later. So then once you've got those things in place, you actually create the entity. Again, LLC or partnership, one of the things is it must be a pass-through entity. Otherwise, as soon as you're kind of compensating someone or having kind of delegated roles in terms of the decision-making process, that's where it starts to shade into the investment company territory. Then electing officers. So our officers operate on an all-volunteer basis, but you can pay them for performing administrative tasks. You just can't compensate them for informing or making investment decisions. But we found it useful to have 3 officers and have been able to divide the responsibilities up between them so that it's not too much of a burden on any one person. So I'm the chair. We have a secretary who handles kind of the onboarding paperwork for new members and receives the communications from investments. And then the treasurer does what you would imagine the treasurer does, keeps track of things, does a report at our meetings, files the taxes, that sort of stuff. And so once you've got your club together, right, next step is to invest, right? And there's a wide variety of things that, vehicles that you can potentially invest in local and local businesses, loans, just private loans to companies, royalties, guarantees, stock or preferred stock. And I'll give an example of a preferred stock co-op investment we made. Convertible notes that start as debt and maybe could be converted to equity later. There's a whole universe of possible structures that you could bring to the table. And then once that founding group has come together, starting to grow the investment club. And there's some sort of like gray areas here around where you cross over from inviting people to join you versus kind of soliciting. And so generally the sense I've gotten from folks in the investment club community is thinking about it as something that you kind of, it's a snowball type process. You don't necessarily want to be trumpeting, hey everyone join and give this money, but kind of working through networks, sort of snowballing. Okay, I know this person, I think they'd be interested, invite them to the meeting. And generally in our club, we'd like to have people come sit through at least one meeting with us, meet the group, have a conversation, really learn what we're about. And if they decide that they're interested after that, then they put in an application, and then we have a vote. And if they're voted in, they pay a small kind of fee to kind of process the paperwork and get them set up, $25 in our case, and then they start making their regular investment. So the Co-op Principle was the club that inspired our club and provided us with their operating agreement that we were able to adapt for the Vermont context and change in some little ways that we wanted to change it. But so it was a investment club that focused specifically on investing in cooperatives. And our club came out of a group that had been involved in organizing a few kind of cooperative projects, mostly in the Burlington area around the Burlington Telecom privatization, and also in an intersecting way, a group that was kind of created kind of a cross-sector co-op network in the state. And so we encountered this idea, we really liked it, and we said, okay, what as an organization of individuals who all have this kind of shared interest, let's create something similar in Vermont that is an investment club that focuses on cooperatives. And so then we in turn provided some mentorship in our documents to a group in Colorado that was also interested in that, called the Colorado Solidarity Fund. So, there's been this kind of, there's a few clubs that have kind of come out of, the first club of this little network that started in Minneapolis. So a little bit about each of these clubs. So ours was founded in 2016. We currently have 27 members and 58,000 in assets. We have it set up so we use ACH to essentially pull member investments every month into our club account, and members can contribute between $20 and $200 a month. We sort of the upper end of that has continued to rise as we've gotten bigger, and it's less of an issue that anyone might own 20%. I think the most any member owns currently is 14% of the total. We've invested in 9 cooperatives and funds thus far. We've both invested in some CDFIs like the New Hampshire Community Loan Fund, the Cooperative Fund of New England, and then also both debt and non-voting preferred equity in 2 worker co-ops, several food co-ops, most recently and made a loan into a real estate co-op. And then in terms of kind of how we run, and I'll talk a little bit more about this in my investment case study, but we have meetings every other month, and roughly like bi-monthly to quarterly. But then we also use a platform called Lumia, which is basically a online kind of forum, but that has a number of decision-making kind of voting tools that was developed by a worker co-op in New Zealand for our decision-making between meetings. So if there's an opportunity that arises and people feel comfortable with making a decision without having had a synchronous meeting, it can be proposed in that and passed in that context. But if anyone sort of feels like the decision needs to be discussed further, anyone can block the decision, and then then it's punted to the next in-person meeting, after which, a vote where no one can block is taken. And then the Colorado Solidarity Fund, right, was something that we helped some folks start. They have 68 members, 85,000 in assets last time I talked, and this might be a little out of date now. They've invested in 3 cooperatives thus far. They chose, rather than doing the monthly investments, to do something where it's once a year, people make a lump sum contribution, which I think was is a little administratively simpler in terms of tracking, and you don't have to do a monthly recalculation of everyone's percentages and things like that, but also a little bit of a bigger bite for people. So there's, I think, pluses and minuses to each approach. In Colorado, they have, there's a fairly significant Latino community, and so they made a real sort of push to make sure that they had translation at some meetings, and were very interested in trying to sort of make investments in some of the Latino businesses, and so they've really laid a lot of groundwork to make it something that that is a pretty diverse club. They do monthly meetings, now all digital, what with the pandemic. And part of this thing is, it's a club, right? So it's not purely a financial relationship, but also a chance to meet people, work with each other on lower stakes projects, and oftentimes there's the opportunity for projects to kind of spin out of these sorts of things. And an example even in ours was there's a real estate co-op in Burlington that just purchased a commercial condo that our club made a $6,000 loan to, and that real estate co-op project kind of came out of the club learning about the model being used in other places, and several members started the real estate co-op as a side project that then eventually reached the point where it became an investment opportunity for the club. So one example, just to sort of make this more concrete, is Real Pickles, which is a worker cooperative that produces fermented foods down in Greenfield, Massachusetts. So they converted to a worker co-op in 2012. Their product is available in lots of food co-ops, natural food stores, that sort of thing. Very good kimchi and sauerkraut and such not. So they did a direct public offering of non-voting preferred stock, which basically behaves very similar to interest-only debt, where it was pays basically the first slice of profits before any profits are shared with their members goes to the holders of the stock up to pay a 4% annual dividend. So this is something where if you had just been wanting to if you're an accredited investor, you could just approach them directly and say, all right, we want to make this. But there's the way they did the offering that allowed for up to 35 non-accredited investors. And so one of our club members had a connection to a member of their co-op and kind of made the introduction. So it was something that was not kind of public solicitation, but came through that, the network of connections. And so so we were able to obtain their offering documents. We had several members review them and give their kind of opinions and thoughts, and then discuss the offering at a meeting. Then once we had the discussion, we do kind of a 3-step process. The first step is to make a proposal to say, do we want to add this investment to our approved investments list? The group voted on our online platform to do so. Then the second decision, which is what we usually do after each meeting, is an allocation of all of our liquid funds between the investments that are currently taking money that are on the approved investment list. We do that through something that's called a dot vote, where it's like, let's say we have $10,000, and so each member gets 10 dots that each represent $1,000. The members allocate the dots how they would ideally do it. And then we take the sort of average of all the members' allocation of dots, and then maybe round some numbers and massage it a little bit, and then come back to the members with a final proposal for ratification that says, okay, so we want to invest $4,000 in Real Pickles, and we want to put $2,000 into the Cooperative Fund of New England, and we want to keep $4,000 liquid for maybe future opportunities that we see on the horizon. Then the membership votes on that. If it passes, I break out the checkbook, fill out the subscription agreement, and we're off to the races. So when thinking about benefits of being an investment club member, there's a few that I would tag here. One is that deal flow thing, right? So especially for small investors who aren't in that accredited category, you can have the desire to find local investments, but it's oftentimes hard to actually sort of like find many of them because of that, the restrictions on how, especially sort of private offerings um, are restricted in terms of their promotion. So you have a group of people who are listening and have different connections in the community, and any one person might find someone in their network who has that connection and then can make the introduction. And so that's that's kind of a great opportunity, and that's also played out in this final point in terms of sidecar investments, where oftentimes the club will make an investment in something, and then a number of members will also say, okay, well, I, in addition to my club membership, would love to also make a $5,000 and $10,000 investment in this thing as well. So you can kind of have those things happening in parallel, with the expectation being that if there's limited space, then the club takes priority because that's how the opportunity came. There's also the kind of deeper investment analysis where if you have multiple folks in the club who can all sort of put eyes on the same information, and they might get some different things out of it. And so that's something where there's definitely been investments where some people have been initially very excited and wanting to just run into it, and then some other members noticed some things that raised some red flags, and the group decided against it. That doesn't always happen, and sometimes there's some people are kind of more conservative than is maybe appropriate, and so that can really be hashed out as part of the group process. But it's it's definitely one of those things where many minds together can really sort of reveal things that a single person might not notice. And then there's, especially for people who are newer to investment, it can be a great way to sort of start to learn, because in terms of our group, we have some people who are very knowledgeable, very experienced, have like had professional lives in capital markets and things like that. And there are other people for whom, other than maybe doing a 401k match at work into an index fund that they just never think about, this is their first time ever thinking about what does it mean to be an investor. And maybe they're just putting the $20 a month in, but to start, as they sort of get comfortable, then they increase it. But it's a great opportunity for finding kind of mentorship, communities of practice around entrepreneurship, in terms of okay, who are the people who kind of are whose thinking kind of is I really appreciate, and are there opportunities to collaborate. And that's something that we certainly are encourage, is the idea of, okay, so there's a certain amount of existing deal flow from co-ops, since that's what our club focuses on. But if there's people who are interested in getting things going, or if there's people in co-op projects that are maybe 6 months or a year down the line might be ready to be invested in, we welcome them in to join the club, learn about our community, and and hopefully the project you're working on comes together, but it's part of this larger vision. So that's the kind of quick introduction I put together, and and that's my contact info. If you're interested in chatting further, I'm always happy to have conversations about this. Matt@veoc.org. And with that, I will turn it back over to hear from some of the other folks.
Great. Thanks, Matt.
Okay, so thanks, Matt. That's perfect. Down and dirty on what it takes to get one of these clubs started. Now we have a great period of time here that we can discuss and share questions. But before we get into the questions, I want to have a few people who are on the call tonight give a wave. We have Jerry Ward and Peter Reed here from the White River Investment Club that you heard Matt mention. That's an active club here in the Vermont side of the Vital Community Service area. And we also have Bridget Murray here from the Northern New England Women's Investment Network. And while we've heard a little bit about the club side of things, I'm going to ask if Bridget, if you wouldn't mind joining us for online to say a few words about how the network operates, because I believe it's a little bit different than the club structure, but also brings in that social or group kind of idea of coming together around the practice of investing.
Yeah, great. Hi, everybody. Thanks so much for the invite to join you. I'm really enjoying learning about investment clubs. My name is Bridget Murray, and I am the New Hampshire lead for the Northern New England Women Investors Network. And in my professional capacity, I work for the New Hampshire Community Loan Fund as the Vested for Growth investor. So, and I'm part of our business finance team there. So, so the New Hampshire Women's Investor Network and the Northern New England Women's Investors Network was basically created to be a source of education and networking for women who are interested in angel investing and in impact investing locally, and also to support more women entrepreneurs. So each state is a little bit different in how they've gone about approaching this. As I was telling Nancy and Erica earlier on, our folks in Maine have a very active angel investing network with some really strong leadership from some women there. So they are very actively involved in that. Vermont doesn't have as many active angel investors, so they tend to be focused more on impact investing. And then in New Hampshire, we've been kind of a combination of the two. So I wanted just to share with you a couple of events coming up, and then I'll post in the chat if that works, Erica and Nancy, some things that are coming up, and then the link to the website and how to sign up for the newsletter. So this coming Monday, April 19th, I'm saying May, I'm not ready for spring. This coming Monday, April 19th, we have Morgan Simon. And I see yes, I'll talk about the angel investors and accreditation, yes. But Morgan Simon is the author of Real Impact, which is a fantastic book about best practices in impact investing. So she's going to be joining us for a book club on Monday, this coming Monday, and you don't have to have read the book. So if you're interested at all in that, please join us, and I'll, like I said, have the link in the chat to join that. And then in May, we'll have a couple of events. One is Don McGee, who is the CEO of an organization out in Montana called Good Works Ventures. And they are doing a lot of really innovative work in another rural part of our country on impact investing in businesses there. So I'm really looking forward to that. And then we try to we'll probably take a break for the summer, but we've been trying to do webinars, both with guest speakers like those two, and then also educational ones as well. We will also be having an angel group from New Hampshire and one of their portfolio companies, a woman-run company called Unruly, in June probably. So, so those are a couple of events coming up, and then just kind of an example of some of the things that have grown out of the New Hampshire Women Investors Network. About 3 years ago, a couple of the women who came to one of our events decided they wanted to start an impact, a women's impact fund. And so they created the Impact New Hampshire Fund, which was for accredited investors, which basically that means having annual income of at least $200,000 individually, or $300,000 with a spouse, or net worth of $1 million, excluding primary residence. And I know that doesn't include a lot of us, but just sharing, what some things have come out of this and what they're doing. But they put together a fund and have invested in a number of women-run or co-run companies in the Northeast, and they actually also participated on a investment that Vested for Growth led in a New Hampshire company, along with 6 other participant investors. So So that just gives you kind of an idea. The events that we do, the online events and whatnot, are open to everyone. The activities that grow out of it that are specifically angel investing are, of course, those are limited to accredited investors. But there are some great learning and educational opportunities and networking opportunities for people interested in impact investing. So. And I will drop those links in the chat. So
Great. Thanks, Bridget. That's great. I think that there was a question, and maybe, I know Matt had a slide about this in a previous presentation I'd seen, but maybe between the two of you, we can have a little bit of a discussion about accredited versus non-accredited and just making sure that we're understanding the terminology.
Sure. Well, accredited, yeah. Did Matt have? I'm not seeing the whole view right now because I changed my view to type in the chat.
I mean, so I can throw out a little bit, right? So it's basically the concept of investor accreditation kind of comes out of the Great Depression and a somewhat paternalistic kind of view on people's capacities around how much risk can you assess and manage, and sort of it basically uses personal wealth and resources as the proxy for sophistication. Some rules have recently changed so that there are a couple of licenses that you can now get that allow you to have accredited investor status even without sort of that level of wealth, which requires some study and taking an exam and stuff like that. So in the last year, it's become a little more accessible than before. But basically, that means that I'd say, and Bridget, I'd be curious to hear kind of your thoughts on it as well. But that there's a number of kind of investment opportunities that you can publicly solicit fairly easily from accredited investors. But if you're going to be accepting non-accredited investors, there's several different kinds of offerings you can do that can either allow for a limited number or with certain kind of like carve outs for it. But certainly the universe of what you're able to do and the sort of ease of which you're able to do it is much larger and much less complicated if you are an accredited investor.
Bridget, did you have anything you wanted to add to that?
No, I think that that's summed up well, and it's quite honestly, that's not an area of expertise for me, so I wouldn't want to weigh in on that anymore. So.
Okay, great. I mean, that's one of the reasons that there has been a lot of interest in the investment club ideas, because it does provide a platform for non-accredited investors to participate in the activity. So great. So I also have Jerry Ward and Peter Reed here from the White River Investment Club, and I told them they didn't have to prepare anything, so I'm going to put them on the spot a little bit, because right before the session started, it sounded like there's some interesting conversations or interests going on within your club, if I'm not mistaken, and maybe you can share a few words about that, because I think you're going through a little bit of an evolutionary stage now, if I'm correct.
Yeah, this is Jerry, and Peter or Elsa is also on too, I think.
Oh, okay. Sorry, Elsa. I didn't mean to exclude you.
Also members. Yeah, I guess it'd be premature to say too much because we haven't done it yet, but we started in about the same time that Matt's club started, 5 years ago about. And there's a lot of other similarities to Matt's group too, by the way. But we've reached a point where we've had largely the same membership for 4 or 5 years, and some of them are not as active, some of them are wanting to get out, some of them have had to withdraw, and we could use some new membership, and we also could use some fresh capital, and some of our investments, I don't want to call them stale, but they're winding down. And we've gone through a period, partly due to a pandemic, where we have not taken on significant new investments for the last year, except for some real little ones. So it's a good time, excellent time for us to we're in the process of closing what we call RIC, now we call it RIC 1 to new investment or new members. And we're about to launch RIC 2. So it's an exciting time for the club. It's needs to get an operating agreement that's blessed by a lawyer and then approved by the members. And we already have a new corporation formed with the Secretary of State. So within days or a few weeks, I think we're going to be launched, because it's that easy, especially since we can do business as White River Investment Club, so we don't have to relaunch everything. So,
Great.
so it's kind of like what some hedge funds do, where they have different tranches of or different generations of their investment, and real estate funds do that, where they have these different batches, and the investors belong to one or the other, or they carry on and belong to multiple kind of generations, classes, if you will. So,
Jerry, I'm going to, go
go
ahead.
I was just going to mention a couple things that we're pretty similar to Matt's group. I think part of this session today is to talk about what investment clubs are about. And
Yep.
yeah, we're similar in size. We have a similar number of members. I think our members have been a little bit more put in a little bit more money. We have some averages that are a little bit up into the $20,000 range. Not average, we have some that are up that high. And we're not a group of angels by any means. I'm hoping someone might answer that question posed on the chat about angel investors versus impact, but I view us as impact investors by and large, who are focused on identifying ways that we can make a difference in the local community, in usually small companies that fall through the cracks with other forms of financing. And we focus on making a difference, basically. And so that's what my off the cuff definition of the impact we have.
Thanks, that's great. That's why we're all here talking about how we can mobilize the grassroots investing to make a difference. So that's perfect.
Yeah.
You mentioned some of the questions in the chat. Nancy, do you want to throw out where we started with the questions?
Yeah, I mean, Jerry just mentioned, it was a great question from Sandy about the difference between angel investing and impact investing. And, you know, as I was thinking about it, I think it's, well, I don't know, but for me, it's apples and oranges. I think you can have an impact angel investment, but you can't have the other way around. But I would let actually maybe Matt answer this.
Yeah, who wants to raise their hand or unmute their mic? Oh, okay.
Rigid, all right.
Oh, we have a lot of answers. Okay, let's see if they all are the same.
Yeah, no, I'm excited. I'm really looking forward to hear people's takes on this. So I would say that you know, you can be an angel investor and be an impact investor as well. And I would say that for you know, people that are interested in impact investing, it's just one option, I guess. That's how I would look at it. Yeah. And of course, obviously, you know, this I think is so exciting, what you're doing, talking about local investing clubs, because, you know, as Matt pointed out, the SEC's rules, the federal government's rules about what makes a angel investor, you know, limits it to, you know, the wealthiest. So fortunately, you know, you're talking about these local investment groups and, you know, all the other ways that Michael Schumann has talked to you about having an impact in your community with your money. So but I want to hear what other people have to say about it.
Yeah, I would throw in that I think impact investor is a normative thing, whereas angel investor is descriptive, right? Like an angel investor is someone who comes in at a certain early point in a company's life, but it doesn't say anything about what the type of company is or what it does, right? You could be investing in like the most virtuous company in the world. You could investing in like, High Velocity Puppy Mills Incorporated, and like, either of those are fine for, or are like an angel investor could be involved in either one. Whereas impact investors, it's specifically the question of like, what are you trying to accomplish with this money in addition to making money, right? You could have a whole variety of values that are driving that, right? But at its core, you could be coming to the table with $100 million. You could be coming to the table with $1, and but if your purpose is to invest with a more than single bottom line approach, I think that's where you that's where you're an impact investor.
I feel like the confusion comes from the term angel. It's angel as in it's an angel to the company that needs the money, regardless of what kind of company it is, as opposed to angel as in it's doing good with its money, right? Like I feel like it's easy to misunderstand that a little bit just by the terminology.
And I would say that angel investors are much more monetary return focused. I mean, and they have to be because they tend to be higher risk investments, in my view, when you're coming in at an early stage of a business. Now, I think most angel funds are looking to invest in 20 or 30 companies and have one of them turn into Amazon and a few others be successful, but expect that a bunch of them are just going to fizzle out. So,
and I think they're also not mutually exclusive, right? Someone could be sort of an angel investor who has a strong impact focus, and someone else could be purely an angel investor, or someone else could be an impact investor who doesn't, who only invests in later stage companies.
But angel does imply that it's accredited, correct?
Usually, yeah.
Okay. From the chat, it was answered a little bit, but at least for White River, it's one person, one vote. Is that true with yours also, Matt?
It is true with ours, partially because ours is focused on cooperatives specifically. So because cooperatives have one member, one vote policy, we wanted to mirror that. I definitely know of plenty of investment clubs where it's kind of where voting power is prorated by the amount of your ownership as well. But I do think I think one member, one vote's generally a good approach, just in terms of if you're a small group that has kind of a dynamic where it feels like everyone's kind of discussing the decisions on equal footing. Because for one person, $10,000 could feel like a smaller chunk of their their total personal resources than another member who's got $1,000 in, and that's really kind of a pretty meaningful thing to them. So I think it can I think I like the one member, one vote dynamic, but I can see reasons to go the other way too.
And then there was a question about exiting. Are there models for an exit? And I think that either Peter answered that it depends on, it's situational, liquidity at the time. Is that true with you also, Matt?
Yeah, so basically the rule that we have is that basically because we have investments coming in every month, any member who wants to sort of pull out, we can up to 50% of whatever's coming in each month is available to buy out member stakes without us needing to have a vote or any further decision. It's just sort of like, okay, one of our members was like, I just had a baby, I need some money, and we were like, all right, we're having $1,200 a month coming in, so we'll cash out $600 worth of your stake, so you have a little bit of extra scratch for this month, and then now she's back in the back putting money in, and then some members have kind of withdrawn that way. We also then do give if a member does want to withdraw, we give other members the opportunity to kind of say, all right, so we've got $1,500 going out. Are there members who would like to increase their stake? Because we normally don't allow people to go beyond the $200 a month. But if someone's leaving and there's not a worry about their stake getting too large, we give people the option to essentially, it's not functionally buying the stake from them, but it's essentially the person sells their stake back and then someone else makes an equivalent investment in. And so that's kind of the, we kind of have that as, with the expectation, again, there's no guarantee of liquidity, but we sort of have that arrangement set up so that if there's kind of a need for it, people can access something if they need it.
Great. And then Elsa has a question for Matt. Do you invest in startups or more mature co-ops? And what kind of financial return do you look for?
We've done both. And it's really been kind of like what comes to the table and if we feel comfortable or not. Pretty early on, we were making very small investments and it tended to be a little more reactive, like the local food co-op was doing a loan campaign. So we bought some of that. Most recently, with this real estate co-op project, it was kind of in the final stretch of trying to raise money for purchasing this commercial condo. And there's kind of a gap. And so the co-op did a little miniature loan campaign, mostly aimed at members, but the investment club was also invited. And so in that case, it was kind of, startup phase, but something that had some real estate backing it. So that was relatively low risk. So, so the club felt comfortable with that. We've also bought some preferred stock from a worker co-op that was more in a startup phase. So certainly the sort of vision is to sort of have this thing be something that kind of promotes and fosters, the cooperative economy in Vermont. So there's definitely that kind of mission element to it that sort of weighs alongside the sort of financial element. And then, so I see this other question in terms of the financial return and then also returns being paid out. So for us, we tend to aim for kind of our baseline is we keep some money in the Cooperative Fund of New England in a note that pays 2%. And then, so we aim for other things that we invest in to be higher. So I think the highest target return is there's something like Kachua Impact Fund, which is a cooperative that invests in a number of other things, has a target return for its equity of like 5.5 to 8.5% a year. But most of the stuff we aim for are probably like 3 to 5 or 3 to 6% range. That can kind of vary also just depending on the impact and other things. And then in terms of paying out, each year, basically the LLC is, at the end of the year, the LLC's value, we attribute pro rata the earnings to that the LLC's had, and that counts as taxable income to each of the members. It's tended to be, not huge amounts, although as we get bigger, it's starting to get bigger. We haven't officially done a distribution yet. I mean, really, it's been, again, that sort of people pulling out has been the only time money's gone kind of out to members. We're in a conversation next year about basically giving people the option to say, all right, does anyone, when we do our taxes, let's do anyone who wants it, a distribution of your share of the profit for that year in cash type deal. So we're still sort of having conversations. It's been small enough and people haven't really had the profit has been small enough that it hasn't given people a huge hit on their taxes. But that's kind of an ongoing conversation for us in terms of how we want to deal with that as we approach, going from 5 to 6 figures.
How about White River Investment
Right.
Club? How do you handle it?
Well, we've tended to just have the members roll their profits and leave it in the fund. The one difference now is we're kind of freezing our first fund and launching this second one, hopefully, and that's where all the new investments will go. So with the original fund, we are proposing now to start doing annual pay downs of whatever comes in, because there's going to be no new investing happening in that fund. So that should just wind down over the next few years. So there will be an actual cash distribution, we hope.
And do you guys do monthly pay-ins the way Matt's does, or is it more like I have $1,000, I can just plop it in there?
Yeah, I think there was a big chunk that came in the beginning, but we don't do a required monthly pay-in.
But we're actually thinking of changing that to be more like the way Matt does it. We've had this issue that without an ongoing source of revenue, the somewhat modest returns that we would get eaten up by just overhead. We still have to pay accounting. We still have to pay a lawyer. We've had one example of an investment that actually did require some legal expense to unwind it. And so we're thinking about with our Rick too, we're thinking about going to a model where you're expected to put in X dollars per year, or unless you've invested. And we actually do accept, if not encourage, investments of almost any amount at any time from our members. So we're not, as we have enough members that we're not too worried about anybody getting too much of a pro rata share. So we welcome other investments because that allows us to have more funds to go to work. So we're kind of like a bank in that way.
Well, we're closing in on the 6:30, which was
and one other thing that I think was.
Oh,
yeah.
Go ahead, Jerry. Go ahead.
Never mind. Go ahead.
Okay. I was just going to say that we're closing in on the scheduled time. So I'm going to talk about what else is going to be happening. But if people still have questions, we'll keep the floor open for questions. So if people need to jump off, they can see what we're talking about here with the upcoming events. So we will be following up this session with an email that includes all the links and resources that have gone into the chat, the event recording, and any answers to any questions that we are either unable to answer tonight or don't get to following these comments. We do have a couple of upcoming events that are going to round out kind of the spring part of our local investment series. Anytime in the window between April 22nd and 24th, you'll be able to view on demand Seeding Change, the Power of Conscious Commerce. It's a 2021 documentary. And these, I believe you need to go onto our website to get the details for all of these. And then the following week, April 27th at 5:30 p.m., we're having kind of another session on Put Your Money to Work Locally, this time looking specifically at how you can invest with a community loan funds 101. For, I think we'll have both Vermont and New Hampshire represented on that call. So that's what we have coming up, but I want to go back to whoever who is able to stay on longer. If there are further questions for any Matt or Peter, Jerry, Bridget, any of these people that we have available to you to talk about what it's like to invest together as a group.
I was wondering, because I know there are a couple of people on here from the Schumann class that were, Sandy specifically, that were talking about starting your own investment club. Did you have any more questions? Do you feel like you got?
Yeah, Libby's on here too.
Oh yeah, Libby too. That's true.
She was part of my group. We have not talked since the class, but I think we may after this. And there's a lot more to it now, I feel like, than I think maybe any of us realized. So it may be that who knows, maybe we'll join in with White River. But yeah, we haven't gotten any further with that yet. Thanks.
Sure. Great. That seems like it's it, huh?
If you want to share your email in the chat, then if I know, for instance, there was someone who had to leave early, Cody, who was interested in trying to get something started. If you want to have your email shared, please put your email in the chat and we'll make that available to people.
Great.
Great.
Thank you, Erica.
To Sandy and anyone else, I don't want to sound like soliciting, but to Sandy and anyone else, as I've said, our investment club is as open as it's ever been to new members right now.
And is that, Matt, I'm assuming, well, I'm not assuming, does geography matter for your investment club?
That's
so yeah, for ours, we tend to aim to have at least members when they join Vermont residents. We have several members who have since moved out, but because we have the sort of remote meetings and the online decision-making process, who've remained active members. But yeah, so again, kind of for ours, it's really, when people are interested, we generally like to have them come sit in on a meeting, kind of meet folks, introduce themselves, get a sense of whether they're kind of in alignment with what we're really aiming to do, because it's, again, I think anything that's involving the impact side of things, right? It's that you're going to be prioritizing some things over purely the financial return. And so you want to make sure that the people you're collaborating with kind of are all in pretty solid alignment on what it is that you're going to be, what it is you are going to be prioritizing. So for us, we definitely sort of, certainly, have been continuing to welcome kind of a few new members a year, kind of as we've gone on. But we also want to make sure that folks who join us are kind of in alignment with our goals.
Great. Thank you.
Great. Well, thanks, Matt, for sharing your time and expertise again, as well as our friends at White River Investment Club. You've all been incredible resources as we've put this entire series together. And coming fall, we're going to be looking at doing some more from the business perspective in terms of businesses seeking to explore local investment opportunities in terms of gaining access to capital. So stay tuned. I'm sure as we get our pencils on paper for that, we'll be reaching out again to see how it works from your angle in that respect. So thanks for joining us tonight. Have a great evening.
Thanks, everybody. Really appreciate it.
Thank you.
Stay warm out there in Reno.
Well
Cheers.
done.
Thanks. Bye-bye.
Who's in Reno?
Jerry.
Jerry, you were in Costa Rica last time I heard.
Yeah, but the grandchildren came and they have to be seen too. So
Yeah,
that's wonderful.
and I'm vaccinated now, so
Yay! Congrats.
that's a game changer.
Thank you for joining, Jerry. Appreciate it.
have a good night.
But it's cloudy and cool here right now too. So
Oh,
okay,
dear.
thank you
At least
all.
you're not going to
Bye.
get the snow. Bye.
Yeah.
Eric, you want to stop sharing your screen?
Yep. There
we
we go.
go. Look at that.
I don't know who we have here.
No, but thank you. I'll put a draft email together along with the link to the recording and sign your name to it and send it out tomorrow.
Okay. Great.
Okay.
There was kind of a pseudo draft at the
Yes.
end of that I tried
I saw. Yes. Yes, you copied Mike on that one, which I loved, and I will pull that. Yes.
Shamelessly.
Thank you. No, I think there is no sense in reinventing a wheel.
Yeah.
But
Well, good.
Awesome. Thank you.
Thanks. I look forward
Appreciate
to seeing the documentary next week.
I know. I think it'll be fun.
Yeah.
Maybe we should I love Matt's idea of.
Yeah,
Have
doing
you
it,
done
having
have
like
you
a
done
viewing
a Zoom?
party.
Yes. Have you done that? I haven't
I
done
haven't. Let's use this as a tryout.
that. Yeah, I don't see why
I'd be
not.
up for
right?
that.
I would be too.
Okay.
Great. So let's look at our calendars for
Yeah.
the 22nd through the 24th and find
Figure out what's going to work. Yep.
Yeah.
Thumbs
Awesome.
up.
All right.
Good.
Thank you,
Have a
Erica.
good evening.
You too.
Bye-bye.
Bye.